Good morning, everybody. Let's get into it, shall we? Nothing special to add about price action thus far. This is the S&P we're going to start with today. It's still in its uptrend. There's nothing wrong with that. It's still an uptrend until we start to break down below major moving averages. 10 exponential being the first one, sitting around 4,100. At the moment, I'm not particularly concerned that even if we break down from here, we'd probably get picked up at any one of these. We've got an incoming golden cross on the exponentials, confirmed golden cross on the simples. So things look quite good for the S&P, I have to say. Again, feeding into the overall narrative, which I've been saying since we came down to this area. I think this is the bottom of the bear market for the S&P. So that is that, and we all know that the S&P and Bitcoin and friends like to trend as one, as all markets do. That's why we've been referring to these everything bounces all the time. So this is the euro. We bounced from the 50 exponential moving average, which technically could be considered a retest of a golden cross. Again, golden crosses, here's your simple moving averages, here's your exponential moving averages, and we've been waiting patiently since December to see a retest of these areas. And this could be it. Sometimes if you're super bullish on a chart, you get a retest of just the 50, you don't go all the way down to the 200. This is a daily, by the way, so quite a strong support and a decent reaction. Now, also, what I did say, though, is that we do have to monitor this, I suppose, quite heavily, because we have broken down below the Bollinger Band Center, which has now got a negative slope on it, which does favor a rejection around this level. That's sitting around here at 108.3. And so we could get a rejection from there. We could even get a rejection around these levels, so 108 areas. So there is a chance that this does go down further. But for the moment, this was a decent buyback opportunity, definitely a decent bounce on the euro. And we'll see how much legs it's got. How far it can go. It might not get rejected from these levels, but we have to assume that it would. Bollinger Band strategy, as you all know, 65% more likely to remain in the portion of the Bollinger Band that you're in. So that means that if we do come up to this level, maybe shorts will stack, because the odds are in your favor to short from here, or just to expect a rejection from there. But for the moment, we're trending up, and we might only trend up a fraction of a percent, but it still bodes well for upside across all boards in the short term until we reach these areas. That's also complemented by the Dixie, which does exactly the opposite of that. That's why we like to look at the euro more. Again, got a rejection on the 50 exponential moving average, trending down towards the 10, the 21, and obviously the Bollinger Band Center. And again, you would favor a bounce from here. And there's your Bollinger Band with a positive slope on it. So this does look like we're going to move down to these areas and then form a bounce from here. So again, same old, but for the moment, the general direction in a very, very short term, it looks like down for the Dixie, up for the euro, up for the S&P potentially. And so with that in mind, we should maybe think about up for Bitcoin. And also altcoins. Just very briefly, the reason altcoins I think have got a subtle chance of movement is because we are below the Bollinger Band on the daily. We're back below the 44% dominant zone. Yeah, we might be getting supports around these levels, but if we don't, we break down and we continue down for a golden cross retest of the 200 exponential moving average. So a lot of things all showing the same kind of setups, but we're just talking about short-term stuff here. Because if we go to our friend Bitcoin, we are below the 23,300 area. We are below the Bollinger Band Center. The Bollinger Bands are pinching quite tightly a bit now. So this offers a potential volatile move, so a larger move. And at the moment, while being below, well, it's a little lower now. It's 23,100, and then the major resistance is 23,300. While being below all of these areas, it does favor a bigger move down than it would do up, provided we are, like I say, below. We'll just call it 23,100, which is a Bollinger Band Center. So a line in the sand has been formed here, and at the moment we do favor further downside for the larger move. And again, I'm not saying that any of these things are going to happen. This could just be a natural consolidation. Markets all seem reasonably bullish still. The general trend is up for everything. But it doesn't mean we can't have the bigger pullback. We have been waiting for. We've been waiting for this. But now look, 200 exponential moving average has got a positive slope on it for the first time in quite a long time now. And we're above the buy zone box, which is the 21,500. So we're sitting around 21,750 for the 200 exponential. So all looking quite good. And again, this golden cross on the simples that we were talking about yesterday does offer a strengthening of trend. Doesn't mean that we can't consolidate into it, obviously, or just come down in general. But overall, all the charts look quite good. So with that in mind, I should say that overall, while dips take place, cautiously, but I suppose realistically, dips ought to be thought about as buying opportunities because it looks as though we're turning a corner. But remember that a deeper consolidation is most likely going to take place at some point, whether it's here or if we go higher and then from there. So new entry points, especially for altcoins, should be thought about, very carefully, and stop losses are appropriately positioned and things like that, because we have slowed down. Excuse me, I was just about to sneeze, but I managed to recover. We have slowed down on this uptrend, and this is like a rounded top. And the Bollinger Bands are pinching for the first time in a little while, and we are below the Bollinger Band center. So if we are going to get a deeper pullback, it would absolutely be no surprise to see it start, or already have started, from around these levels. But even if that is the case, over a medium term, provided we hold above, I'd probably call it holding above 21,500 at this point, then the dip is likely to be continued onto a new high. And remember what we were saying yesterday about the weekly death crosses as well. The weekly death cross is a thing. Whether you're bullish or bearish, is very likely to see a retest of that. They haven't happened yet. They will be happening around here, and that holy grail kind of figure is around 25,000. Now, with this, just one last thing before I go, because I know death crosses and golden crosses seem to be a trending thing. If this death cross happens, fair enough. It's not too much of a big deal, and the reason why I say that is because the slope on this 200 simple moving average, this 200 weekly moving average, is up, right? So it's not a downtrend as far as that moving average is concerned. The 200 exponential is down, facing down, but that wouldn't take too long to bend that back up if we were to start closing above 23,600. But this 200 simple moving average is going to take a little longer to actually have a negative slope on it. So we shouldn't get too concerned about this death cross, although it is real. Back in the summer when we were talking about this, potentially happening, we worked out that on, historically, I think the NASDAQ is what we used to show it. So historically, it has happened on the NASDAQ. And when you balanced it down, when you boiled it down to, does it have continuation or not, it was 50-50. Sometimes it did, sometimes it didn't. It's such a lagging indicator, such lagging moving averages here, that we shouldn't read too much into it. Dailies, probably more important, I would say, and the dailies have golden crossed, and the exponentials will likely golden cross by the end of this month, if, of course, we don't dump into the abyss by then. Either way, it does look quite good for continuation, I would say, over the medium to long term. I have no real problems with that. And the short term also, I think, has got a good chance of bouncing and reclaiming these areas, and that should take us to our next level, around 24,005 to maybe 25,000. But until then, we're just going to be sitting around waiting for traditional markets to do their thing. But yeah, it is what it is. There's nothing much more we can say about it. Yeah, downside can happen, and if it breaks down below, well, we'll call it the above 20. If we start to close candle bodies on a 4-hourly, or higher, obviously below 20, we'll call it 21,500 back into this box, I think we probably do have a deeper correction still, and that might actually be a consolidation that will take weeks and maybe even the rest of this month. But until then, we're still okay for the moment, and traditional markets and Forex will give us the heads up. They will help us make a bit more of an informed decision about the overall direction of Bitcoin and crypto in the short term. Right, thank you for watching. I hope you have a nice day and take it easy.